Hello and welcome to Rand Squawk Weekly Wrap video. In terms of equity markets this week, it's been another good one, with the S&P 500 rallying around 1.75% over the weekly period as we head into the close. But a lot of that shine being taken off very recently from Walmart, that particularly significant retailer who did foresee a bad start to February sales due to some of the effects of the removal of the payroll tax that we did go over on January the 1st. So some of those fiscal cliff concerns still filtering through into the US consumer. But elsewhere this week, all focus has been on the FX markets as we do head into the G20 Finance Ministers and Central Bankers Summit in Moscow, where according to the latest drafts, there is to be no mention in the statement of not targeting FX markets. But we are seeing a bit of convergence between the G7 and the G20 now, in that they are likely not going to single out Japan as any sort of currency manipulator, so possibly putting a bit of support there for the Bank of Japan's monetary easing measures. But elsewhere this week, more bad news out of Europe, with Eurozone, German and French GDP all coming in negative territory, signalling what could be the start of yet another period of contraction across the European Monetary Union. But looking ahead into the next 5 days, quite a few updates from central banks, with the FOMC and the Bank of England both releasing their minutes from their latest monetary policy meetings. So looking out to see quite how much divergence there is among members as to how much action can still be taken by central banks. But moving on to Thursday, we have Eurozone, French and German manufacturing and services PMIs, which are always a key growth indicator, just to see how much of that weakness in Q4 has filtered through into 2013. But over in Spain, a lot of the focus will likely be on the PM Rajoy, as he is due to speak in Spanish Parliament quite a few times over the week. And then towards the end of the week, we do have the EU releasing their investigation and assessment of the Spanish deficit programme. So of course, looking out for any key updates from that. But elsewhere, we see the return of Chinese participants to market following their 5-day market holiday to celebrate the Lunar New Year. So seeing how they have interpreted the past week's worth of trading and see just how they manage their behaviour going through back to market. So of course, we'll bring you any key updates as soon as they hit the wires. But in the meantime, that's all from me. Make sure you have a fantastic weekend.